Good afternoon, everybody.
That's okay.
Before I start my session, I'd like to, on one hand, wake up you a little bit from the launchcomer, and on the other hand, I would like to say that, this is the first time ever in my life in Lithuania, thanks to Jeff Burden for his kind invitation. And since I landed last night, I feel like this country is amazing, and I feel like I just love the country instantly. Amazing food, amazing city, but most importantly, amazing people. And I have some opportunities to talk with some of you this morning, and I feel like, this is an amazing crowd. It's very different from the crowd that I used to talk with, in that, instead of just me giving out information and giving out my knowledge, I feel like I learned something throughout these conversations as well. So again, thank you so much for everything. And right now, I suggest us to do a little bit exercise, which is different from what Miko has previously suggested. So please follow me. Put our hands in the air, and let's give a round of big applause for the amazing team behind Blockchain Forum to put together this such an awesome conference. And most importantly, for the legendary Jack Burden for this, to make things happen. So today, my topic is investment trend from a VC perspective. A little bit about myself. So I was born and raised in China. I went to college in both China and the US. Upon graduation, I spent some time in investment banking, and after that, I moved from the East Coast to the West Coast to become a venture capitalist. So it's been almost 4 years since I've been investing, and I started Outpost in late 2015, and that has been a very rewarding journey for me ever since. So blockchain is one of the sectors I looked into back in 2015, and we were lucky enough to make the first investment back then into a company called Jintong, which is a China-based blockchain enterprise service and solution provider company to Chinese enterprises, and they have a lot of clients from Chinese enterprises to some governments and government-backed enterprises as well. So that company has been doing very good, and we've been following the traditional investment style and doing equity investment. And since early 2017, we also started to make token investment, participated in a number of pre-ICOs, and the whole year of 2017 has been a great year. So so far, it has been very rewarding as well. Today, given the limited time, I think investment trend is a very big topic, and I'm not here to basically share you all the data that's already available online or talk about something that you already know. I'm here today with something, with an idea to share. So I really want to share one idea in my session. And by the way, I need the clicker. Thank you. So I'd like to start with a question. How many of you are actually using a blockchain-powered application or a dApp on a daily basis? Raise your hand. Great. I actually see a few hands in the room. And that means we have an amazing crowd, and we have some actual users of blockchain. In some other conferences I went to, when I asked this question, nobody raised a hand. And this is a problem. So after all the hype, after all the excitement, after all the investment and development, now we are in June 2018. It's been a long time. And we talk so much about blockchain. We talk so much about how this amazing technology will disrupt everything and be revolutionary. Today, we are not using it. Few of us are using it, and that is a problem. So today, I want to share you an idea that debt is a key for everything. And for me as an investor, a lot of people ask me questions on, hey, Ryan, what do you invest in the blockchain space? Well, if we look at the blockchain investment spectrum, we have a lot of things. So in the ecosystem, on the left, we have a lot of blockchain infrastructure from Bitcoin, Ethereum, EOS, Neo, Quantum, Nebulous, Moic, a lot of them. And sitting on top of the infrastructure, we have protocol. And sitting on top of protocol, we have dApps. And I call this as a core of the ecosystem. And on the right side, we have a number of other components and sectors in the ecosystem. So exchanges, wallets, hedge fund doing crypto tradings, media, advisory company, a service company, and mining company. So if we look at the equation, what's happening in the left? Infrastructure, protocol, dApps, these are creating the ecosystem. And what's happening on the right? Exchanges, wallets, mining companies, hedge funds, these are servicing the ecosystem. So if we look at the value of the whole ecosystem, the value driver are in the core instead of the servicing part. So let's forget about what's happening on the right, on the right side, on the left side for now, and just focus what's happening on the other side. First of all, infrastructure. Infrastructure is amazing. The technology is fundamental, and it is a backbone of all blockchain technology. And if we look at the data on CoinMarketCap, so in the top 10, in the top 10 cryptos, everything, they are all blockchain infrastructures. And if we look at the top 50, most of them are blockchain infrastructure. And the key to investment is timing. So if we think about investing in blockchain infrastructure from a timing perspective, most likely at this point, it's a little bit too late. So if any new blockchain infrastructure, they haven't got into the first page or the first 3 pages of CoinMarketCap, probably it's already too late to be considered as an investment, because it's very hard problem to solve, and at the same time, it takes a long development cycle to actually, from an idea to shape an actual product. Protocol. A lot of investors love to invest in protocol. I used to invest in a lot of protocol as well, but after investing in a lot of protocols, I started to become a little bit skeptical about protocol investment. So if we take a step back and think about what a protocol is, it's actually a middle layer living on top of the blockchain infrastructure, servicing the dApps. So on one hand, it relies on different blockchain infrastructure to live, and on the other hand, it relies on the adoption of dApps to become popular and to become useful. But as we previously mentioned, the blockchain infrastructure are not mature at this point. And at the same time, the dApps are not being adopted. So how can we expect protocols to drive a lot of values when the blockchain infrastructure is not mature and the dApps are not being adopted? So I'm a little bit skeptical about protocol investment at this point, and I think it might be a little bit too early to invest in protocols. And now let's do a reality check on the dApp. CryptoKitties versus Facebook. So we are comparing the most popular consumer app on the dApp side versus the most popular consumer app on the traditional application side. So Facebook has a daily active user of 1.6 billion. Now, does anyone know what's the latest daily active user for CryptoKitties? That's right, 400. So we are talking about a difference of 3.3 million times in terms of the DAU between the best traditional application versus the best dApp. And I think that number is highly achievable. That 400 number is highly achievable. And it is very likely that there will be some dApps tomorrow that will beat the 400 number and lift it up to maybe 4,000, to maybe 40,000. And that's the opportunity. And if we look at what's happening for all the smart contracts and all the dApps, this is what's happening. The most used smart contract on Ethereum has a DAU of a little bit over 3,000. That's it. So we are talking about the actual blockchain adoption. We are talking about the dApps that can be used by average Joes on a daily basis. But this is what we are looking at today. And I think that is exactly where the opportunity is. So dApps, why it's not being adopted at this point? You know, dApps are based on blockchain, and blockchain as a technology, it has a lot of advantages, but at the end of the day, blockchain as a new technology compared to the traditional technology is very inefficient in terms of performance. So there was a talk given by Vitalik just a few weeks ago, and Vitalik mentioned that in terms of both the computation power and the storage, if we assume that, if we assume at 4 gig weight gas price with Ethereum price at $420, the storage performance and the computation performance of Ethereum is just 1 million times less than the traditional, which means on one hand you have a dApp, and on the other hand you have the traditional application. And the traditional application is, from the technical standpoint of view, is 1 million times more efficient than a decentralized application. And also we know that dApps cannot solve everything. It's good for only some of the use cases. It's not good for all the use cases. And most importantly, as an end user, as a average guy who's not in blockchain, they don't care. They don't care whether the application is based on blockchain or is not based on blockchain. All they care about is they don't want to spend the time and they don't want to spend the effort to set up the wallet, to have a private key, and to write down the private key and save it into a safe and go through all the procedures and paying for each of the transactions they interact with a smart contract just to use an application. That's not the future we are going to create. So I think right now, with all these challenges and with all this excitement in the blockchain, dApps is the most exciting investment opportunity for me as a VC. And also, if we look at what's happening in the whole blockchain space, other than the value of storage as discussed on the previous panel by Miko, if we want to find out some real value of the whole blockchain ecosystem, we cannot just live in this new reality of crypto. A lot of people has been saying that, hey, crypto is a new reality. People in the crypto world, we feel like we are talking about a different language and we are at a different pace. So a lot of people has been saying that, hey, crypto is a new reality. But without a real world adoption, the crypto is virtual. Without dApps, crypto is only virtual. And dApp is a thing that makes the whole space, that makes the whole ecosystem real. And I think it's very likely that tomorrow or next month or 3 months later, there will be an application that has 4,000 DAUs, 40,000 DAUs, or maybe 4 million DAUs. And that's something that I would be super interested. And if you are a dApp developer, please talk to me. And a dApp investor, please join me and let's do some deals together. Thank you so much.
So we got 4 minutes. I want to clarify a couple more things. So Outpost is investing in specifically what kind of dApps right now? What are you excited about? Specific sectors, specific things that you think in the 3 to 5 year window aren't just going to take all the arrows for the 7 to 10 year window?
I think it's less than 7 to 10 years window for sure, and it's definitely less than even 3 to 4 years window. I think it's happening right now, and actually the most right now I look in terms of dApps. I'm looking into a lot of games. I think the non-fungible token, the digital collectibles, and all these use cases built on top of.
So the things that I hear, if I'm listening to that, the things I hear, gaming, virtual collectibles, things that we've seen kind of scale, but then break some of the protocol layers until we fix that.
Sure.
Why? Because that intuitively gets the masses adopting and into this world in a more frictionless way, meaning the entertainment value alone or the gamification of it gets me comfortable with whatever minutia I have to jump through, maybe not a wallet, and then that then creates enough mass scale where some of the more, call it utilitarian apps can actually be adopted.
I think, what's interesting is we don't know. Like, this space is so new, and I think the killer dApp going forward may not be what we know as of today. It could be some new use cases and new applications that is enabled only by the blockchain technology and can be enabled only in a decentralized way, and does not make sense if we use a traditional mindset when we are thinking about this problem. So, although I'm looking into a few different categories, but at the end of the day, what kind of dApp will be the most popular? The truth is, I don't know.
Well, I think that's a key point that I would agree with you on. From our vantage point, we see industries in the financial sector or in even auto, for instance, that aren't thinking about it from a blockchain-only level. They're thinking about it from a business model reinvention.
Sure.
How do I collaborate with my competitors, right? How does BMW, Toyota, and Renault, for instance, with DLT.mobi out of San Francisco, how does that consortium move to create new efficiencies in the supply chain that essentially used to be unthinkable, but now put the database outside of the organization in a consortium model that is kind of a permissible but public to the consortium members? And now I share the cost of development, I share the dApp feature set program development, but I also benefit from the innovation that happens even with my competitors, and I do it because if I don't do it, I'm going to be too late when my competitors do. So these business models that shift will open up new profit centers that don't exist today, and then that'll require new dApps.
Right, absolutely. And I think, the interesting thing is, although there are a lot of competition that's happening in the crypto space, but I see a lot of more collaboration than competition in this space, and people have been very friendly and has been very open-minded about different ways to collaborate. And most importantly, people in the crypto world, they kind of different from the traditional or the past few technology hypes in terms of I won't be the best and I won't be the number one. People in the crypto world seems to share a very similar value somehow, and this kind of shared value of being decentralized, and we don't want to be like the winner take all, and we want to be just an open ecosystem and share it share it with everybody, and collectively, let's make the system stronger.
Yep.
Let's make the network, the community behind the system stronger. And I think this shared value is a key driver for both on the consumer application side and for the enterprise side. For example, what you mentioned about potential collaboration between BMW with Toyota, and this kind of shared value is a philosophical driver that we've never seen before.
Right. Couple rapid fires and then we're going to wrap. So Outpost VC, average check size. What do you write?
100K to 500K, we mostly do early stage, but
Pre-revenue or early stage
Pre-revenue.
revenue? So you'll do pre-revenue, 100 to 500K means you reserve another 500 for the winners, or?
we reserve more for the winners.
Okay, so reserve to pay in the A round.
Yep.
Seed round phase, games, entertainment, collectibles, kind of the focus right now, not that you're limited to that.
No, we are not limited to that. So we look into the full spectrum, and in the past we've done blockchain infrastructure investments, protocols, dApps, wallets, mining companies, etc. So
do you lead in price, or do you syndicate most of your deals?
we syndicate most of the deals, but
Okay.
for selected deals we lead.
Okay, so typical total size might be 500K to $1.5 million. Certain times you'll lead in price if it's small and it makes sense. Otherwise, they go get the first 3 to 500. You syndicate in at 1 to 500.
Exactly.
Okay, so if you're a dApp or if you don't know what that means, Google it and then pitch him when you're ready.